The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
With us now is George McConaughey and Scott McCartney, senior wealth advisors with a long history of helping Canadians build wealth for retirement income. George, Scott, welcome to the show.
Thanks, Sybil, for having us.
Great to be back.
Well, I'm thrilled to have you back because since you were here last, we had such an overwhelming response and request for your book, If Money Could Talk.
Great.
I felt like we needed to do a deeper dive into what you call the bucket system, which is helping Canadians make sure they have ample income during retirement in a worry-free portfolio.
Exactly.
I know, it's awesome.
So before I ask you about the bucket system, Scott, what do you think is the biggest issues facing Canadians today when it comes to looking at retirement income for life?
It's definitely inflation. And that has really been rearing its ugly head lately. And, erosion of one's spending power.
You mean $50,000 today isn't going to buy me what $50,000 will buy me 20 years from now?
Yeah, it won't. And people don't think about that. And They don't. And it's a big deal.
And especially with pension plans, because they don't keep up.
Oh, that's a very good point. So if people are relying on their pension to keep up with inflation and always have this glorious life,
right,
it may not be the case.
Right.
Yeah.
And longevity, how is that affecting people's retirement income?
That's why we have a fourth bucket in our system, is to counteract that and make money last to either 90, 95, 100. Did you know that a newborn today will last into their 110 years?
I don't know if I want to live to 110.
Yeah, sure you do.
Well, it depends how healthy I am.
Exactly.
I mean, who knows?
Yeah, exactly.
And if I've got all my marbles, that would be good.
Yes.
Yeah.
Mind you, if I lost my mind, maybe I wouldn't know. And as long as I'm happy, that's okay.
I think that goes true for everyone.
Yeah.
Be
So
happy.
you were jumping ahead to the fourth bucket. I got to bring you back here. Tell me about the bucket system. How many buckets are there and what is it?
There's three in what we do is we take money that people need after a thorough discovery of what they want and desire and expect in retirement to spend on a yearly basis.
Yes.
So say they need 30 grand for the first year, we put 30 grand in a high interest savings account and give it out to them monthly.
Okay, so bucket number one will have 1 year's worth of retirement income.
Right.
Yes.
Just parked in a safe, high interest savings. You don't have to worry about it. It's
Right.
there. You're covered.
That's your monthly paycheck. Bucket
Monthly paycheck, bucket number one.
Absolutely.
What's in bucket number two?
Well, we're using a GIC right now in bucket number 2, okay? And that's bucket number 3 is mostly fixed income, a little bit of equity sprinkled in, that kind of thing. We're trying to outpace inflation in bucket number 3.
Oh, equity just sprinkled in. I like the sounds of that.
Just a very small amount. It's just to keep up with inflation, 3 to 5% on a 3 to 5 year portfolio.
Because
That's
we
all we're
know
after.
that high rate savings and GICs will not keep up with taxes and inflation over the long run.
Exactly.
Exactly. So what we've tried to do with the bucket system is help clients have a worry-free retirement
Yes.
and not worry about what their equity bucket does on a day-to-day basis, because
'Cause
it
you
is
need-
volatile.
And you need it.
And you need it
Yeah.
to
So
last.
it's kind of the catch-22. You need to have the equities, the stock exposure, and they can be good quality blue chip, diversified stock portfolio.
Correct.
Or funds.
Or funds, mutual funds, a number of things, ETFs, but you need to have that exposure to equities
You
to
do.
beat taxes and inflation over the long run, to protect your lifestyle.
Absolutely. So if you're retiring at, say, 55 and you live to 95, you've actually have more years in retirement than you do working.
Yes, and people I don't think have planned for that.
No.
But yet, with equities, you have to be able to stomach it because the stock markets do go up and down.
Right.
Absolutely.
And it sounds like your bucket system, if the markets
Yeah.
go down, well, bucket number one's going to take care of your first year.
Bucket two.
number 2 and 3 will take care of years
Correct.
2 and 3.
Right.
Yeah.
So why only 3 buckets before you get to the equity fourth bucket?
It's 3 years, and the reason for that is that we find that market cycles are about 3 years.
Okay.
Okay, so people are drawing off bucket number one, and that's their first year. Then they go through number 2 and number 3. If we go into a prolonged correction in the stock market or something like
Yes.
that, then we have 3 years to be able to take from these buckets, not their main portfolio.
Which is great, because we know that if you have to sell stocks when they're down in value, you will lose money.
Yes.
You want to sell stocks when they're up in value.
Exactly. Don't get caught in 2008 situation having to live off that.
Unprepared.
Yeah.
Basically selling things at a great discount. So how do you then manage the fourth bucket where your stocks are? How often do you take the profits out of there?
Right.
So that's the magic bucket. And in my world,
magic bucket.
that is what makes me get up every day to go to work.
Tell me about this.
So with clients, we have a high water mark on that bucket. And once the market value goes beyond that, we skim some off and put it back in bucket one.
So
and
you're
that could
forced
be,
to sell high.
We're forced to sell high instead of like normal Canadians,
Right.
buy high, sell low.
Yeah.
we tend to try it the other way. That way we can make people's capital last way longer, and they can have a better lifestyle. They can give more to their children or to charity
Yes.
at the end, whatever they like. But I think we've done our job to help them have a worry-free retirement, and that is key.
And we're using market gains to fund these buckets.
Yes.
Which is great. So
Instead
if
of your own money.
well, you don't want to do that.
No.
Yeah.
And if you've got a $600,000 portfolio and
Right.
need $30,000 a year of income,
Yes.
tell me how that would work.
So you would have 30,000 in bucket one,
Yes.
30,000 in bucket two, 30,000 in bucket three.
Okay, there's 90,000.
So now
There's your 3 years.
now your fourth bucket is at 510,000.
Yes.
If the market goes up to 520,
Yes.
you skim 10 off, put it back in bucket number one. Now, we know that the market goes up way more often than it goes down.
Yes.
So if you end up with 5 buckets, because we just keep skimming,
Yes.
and then the market goes way down.
You're okay.
No, but talking to the client, they might go, can we put some of that back in now and buy low?
That conversation does happen.
Okay.
That happens.
Yeah.
And that is the best part of it.
Well,
And we
that's-
love skimming. We love skimming.
Then you've always got money to take advantage of opportunities
Yeah.
and protect your income. And to our viewers, do you want to learn more about the bucket system and other money tips? Email us, as we have a limited number of If Money Could Talk, the book that George wrote, available to give away. When we return, discover which is better, paying down your mortgage or investing in your future.